Hello, traders. It is Sunday, June 16th. Happy Father's Day. I've been celebrating Father's Day myself, so I'm doing the recording a little bit later. Before we get started, I'd like to mention that Tuesday I'm doing something really exciting. I have one of our members, Rajul, who has been doing his own recordings similar to what I do. So he goes through his previous picks. He takes a look at the market, does his market analysis, and then he uses searches to find new picks. And so he does these videos every single day. He doesn't do them to generate a big YouTube audience. He does it for himself so that he can ingrain all of these lessons and go back and review what he was thinking and why he was thinking that. So please stay tuned. We're going to be doing a live event Tuesday at 11 o'clock Central Time, noon Eastern Time. So look for that link. Should be really good. I'm going to have Rajul talk a little bit about his trading journey and his background. I think you're going to find it very interesting. So what was my last pick? Where are we at? What's the market doing? My last pick was AFRM. And my theory was that the market is really neutral right now. Really doesn't look like it wants to go higher or lower. The trend is higher. It's at the upper end of its range. I didn't think we were going to get much out of the CPI. I didn't think we were going to get much out of the FOMC. So with the market near its all-time high, I felt that there's a chance for us to see a little bit of a dip in here. I am not bearish. I think the market's going to be trapped in a range for a while. We're at the upper end of it. So I was looking to do a neutral to slightly bearish option strategy. And we had AFRM that has been in a nice steady downtrend for almost the entire year since January. So every time it tries to rally, whap, 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 lower highs. So we've got this strong trend in place, and we wanted to sell an out of the money bearish call spread to take advantage of decent option implied volatilities. So I sold the 33.35 bearish call spread that expires July 5th. I had also mentioned a week ago that we've got a couple of holidays coming up. One of them is going to bisect this week, so it's going to be a quiet week, I believe. In any event, we've got the 4th of July holiday coming up. Market hasn't done much. Volume's been light. So let's take advantage of time premium decay and let's sell some out of the money options that expire in 3 weeks. Well, guess what happened? So here we are. There's Monday. Everything's good. We get the spread on. Everything's looking just fine. And then Tuesday, we get this gigantic liftoff. Wednesday, the market benefited from a better than expected CPI report. And look at this stock shoot all the way up to $38. A lot of people that were in the trade went, oh my God, what am I going to do now? Should I buy it back? Should I leg out? What should I do? Just hitting the panic button instantly. Now, there was news on the stock, and the news was that Apple Pay was now going to be associated with AFRM, so you'd be able to use AFRM to purchase your goods on Apple iPay and pay for them later. Well, the stock jumped higher, and then on that big market gap up Wednesday, it was all the way up to, I believe, let's take a look, 39.25. I was watching the stock. I was equally happy to buy some shares of stock if this was a legitimate breakout, and I would have just gone long and I would have offset my losses on my bearish call spread by just buying some stock. Hey, there's material news that came out. This is excellent for the company. The stock is breaking through all the major moving averages. The stock is breaking through major trend lines on heavy volume. Everything would look good. I was happy doing that. But that's not how things played out. See, all of these sellers have been very persistent for months, the entire year. They were not just going to go away. And I knew that. And so when we had this big breakout here, I started to watch the stock near the high of the day, and I could see weakness as the market was going higher on Wednesday, and there's the price action Wednesday going to a 15-minute chart. There's your big market gap up on a 15-minute chart on Wednesday. And what did AFRM do? Well, it could not advance. So we had this long green candle in here. We've already had one gap up on the news, and then kind of gapped up in sympathy with the market because the market had that big gap up. So now you've got the stock starting to hit some resistance, and I noticed these long wicks, and we gave up half of this long green candle. I started shorting in here, and I continued to short. I couldn't leg out of the spread because the bid-ask spread on these options was a mile wide, like 60, 70 cent bid-ask spread on the 33 calls, and even the 35 calls are super expensive. So there is no legging out of the spread when you've got bid-asks like that. But you can always buy the stock or you can short the stock. So that's what I did. Made excellent money. I can't recall, I think about $1.20 on this move on Wednesday. Shorted the heck out of it on Thursday. Made another like $2.30 on it. Didn't touch the spread. And lo and behold, here we are with the stock at $30.91, and that spread that I showed you a week ago still looks good. I have it on. And so that is why we trade stocks that have a long-term trend like that. And when we get some kind of surprise news, it's going to happen. There was no way for me to predict that. I didn't have any type of indication like relative strength, heavy volume, breakouts, nothing before the news. It just came out of nowhere, blam. Stock ran higher, plus it benefited from the market breakout as well. But the sellers were going to be back once this move exhausted itself. And then you've got a gigantic, if you don't count the extent of that wick fully, you've got a gigantic bearish engulfing candle, and you're back below the 100-day moving average. And you can see how this 1OP trend line, this is a high minus trend line, held beautifully. And now the stock is well below all the major moving averages that we were leaning on. I still like AFRM. You don't make any decisions on swing trades until you've seen the market close and the stock close that day, because it can be all over the board and the close might look very, very different from what the stock was showing you earlier in the day. And so this is a really nice short. If you did nothing and you just sat back on your spread and evaluated the price action, by the middle of Wednesday, you knew that this stock was in trouble. It closed just above the 100-day moving average with this long bearish hammer, and then the next day, the bearish engulfing candle. So stick with your positions, analyze the news, and when I read the news, the company itself said, this is not going to have a material impact on our revenues even through 2025. Okay, that's what the company said. So I wasn't overly worried about it. I hope that all of you were able to navigate that. You got to stick to your guns. And when we day trade, we always want to make sure that we like the stock on a swing trading basis. This is why you're going to get stuck sometimes. This is also, obviously, if you're swing trading, you want to have the stock in a longer term downtrend. So let's take a look at the market and see what it's doing. Last week, this was really our last chance for big news and a big breakout, because we're going to go into a news vacuum in the next couple of weeks. We really don't have anything major. CPI, FOMC, those were the two big items. We've had some earnings coming out, so ABGO had excellent earnings announcement last week. Oracle rallied, so the earnings have been coming in good, but there just aren't many earnings releases right now. S&P's trading at a forward PE of around 2180. That's rich. Okay, that is a fairly lofty valuation. So you're going to see a little bit of profit taking. Asset managers are going to have a very difficult time getting excited about buying the market at the all-time high. And we've seen with this choppy price action in here that there are buyers and sellers. We are not off to the races. This has been a very light volume rally right through here. What does that mean, Pete? What does that mean? Is that bearish? Is that bearish? I've heard low volume, that's bearish. No, it's not bearish. This low volume can turn into heavy volume with the market continuing higher. I've seen it happen many times. So just because the volume's light right now on this rally, don't think that the market can't go higher. It certainly could just continue to float higher. It's one possible scenario. Another possible scenario is that somewhere in here, we get one of these long, nasty red candles, then a little bit of follow through. So if you're on the long side, the one thing that I would want to mention for sure is these bearish engulfing candles off of the all-time high. If you see that, danger, 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 exit long positions, go to cash, expect volatility, day trade from the short side, because the market is due to pull back and we'll have a dip. Once that dip comes, that's going to set up another buying opportunity. So am I looking for doomsday here and a big major crackdown? Not at all. I'm looking for a dip like that. Remember how we bought here? Remember how we added there? That is the mode that you need to be in right now. Buy dips. Buy dips. Sell rips. When you get a rip higher like this and a compression with tiny bodied candles, take gains on swing trades, sit on the sidelines, wait for the next dip. If you try and force things right now in here, this is crappy price action, okay? And we're vulnerable to a one-day drop or a two-day drop that might manifest into something a little bit more. So I would largely be in a holding pattern right now. You're watching my videos, so I've got to give you a pick, and I've got to find trades. Well, if you're going to force me to find one, fine. But otherwise, I would be keeping my powder dry. We have a holiday that is going to bisect the week. So Wednesday is Juneteenth. You might as well take trading out of the equation Tuesday. There's really no news. I think there might be retail sales coming out Tuesday. That's the biggest news of the week. There's some Fed speak. So you take Wednesday as a national holiday. You might as well take Thursday along with it because there's this hangover after a national holiday. So we get through this week, and it's a little interesting because we also have triple witching this Friday, which you're normally going to see higher volatility during a triple witch week. Well, we have one day less to work with. So I'm kind of thinking Tuesday might be that day, Thursday might be that day. And the only reason for the volatility is that the futures contracts are rolling over. And so you get to see some intraday volatility. The indices are adjusting, so they're adding and taking stocks out of it. So that's something you can watch for. But then we really don't have much of anything going on. You're going to get some end of quarter window dressing. That's about as exciting as it gets. And then we've got the 4th of July weekend coming up. So you got another holiday. I got to tell you, I don't see the market doing a whole lot. The path of least resistance when you have a very light news cycle is the one that you want to favor. So you'd favor the upside. And if you looked at the price action every single day this week, what happened? Market opened near its low, closed near its high. Open near its low, close near its high. That is bullish, but that also tells you that every one of these little moves gets challenged the next day. Are the buyers still there? Yup. Okay, now we can go higher. And so if I go into a 30-minute chart, I would maybe go 15-minute chart. I should be able to get all the data points from last week. So this is last week. You can see market opens lower. Closed a little bit higher, but not much. But Monday, definitely higher. All right? That bid check survived. Okay, Yeah, the buyers are still there. Take it higher. Blam, the next open. Yep, buyers are still there. Take it higher. So when you get these down opens, Thursday we had a higher open and then we pulled back. You can expect these bid checks during the day. Once that support has been confirmed, you're going to get a rally. Friday, the market sells off. Confirm, 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 confirm the bid. Then we go higher. So you should really wait for that bid check and then favor the long side. That's the easiest way to day trade this market. Swing trading, a little bit more difficult. You can sell out of the money bullish put spreads, but I still feel that we're going to get one of these days where we have a market decline, maybe a few days of decline at the upper end of the range here, and with the volume being super light. So I'm preferring right now to sell out of the money bearish call spreads. AFRM, great trade, worked really well. We did have some news that blindsided us, but we weathered that, and now we're on the right side of the trade. The reason I'm also favoring the short side is because when I look through the lists of stocks, so on the long side, I went through and already looked at a bunch of stocks, and Nvidia looks really good, Netflix looks really good, Costco looks really good, but all of these stocks are doing exactly this. They're reaching for the high, and they're struggling to advance. When I look at bearish stocks and shorts, ka-chunk, ka-chunk, ka-chunk. I mean, nice big chunks taken out of these stocks. And once that selling pressure starts, it accelerates. So on a day trading basis, I think you can find more consistency on the short side. And so I'm also going to be looking to sell another bearish call spread. I'm not overly bearish though. It's really important for you to understand that this is a neutral to slightly bearish position. And I'm going to put a caveat into this. So focus on selling out on money bearish call spreads. And I think the stock that I have today for you is actually going to be decent to buy puts on. But I'm going to give you the caveat right now. You do not buy puts on it until you see a gap reversal off of a new high. And we could get one this week, okay? That would be very typical of triple witching as well. So you get a nice gap up to a new high and then the rug gets pulled out from under you. When you see one of these candles, a long red bearish engulfing candle off of a relative high, that's your green light to go and take this trade. Not before then. Crappy light volume trading, it's what I'm looking for this week. But if we do get a pullback, we could get some follow through in there, and I think that would be worth trading. So as I go through my lists, I'm taking a look at some of the different stocks. I'm just going to go into Red Royal Flush and see what we've got there. So take a look, targets at the top, but you can see a lot of green here, so I'm probably not that interested in it. Although that's a nice little breakdown below the 200-day moving average. You can see the stock tried to rally. It filled the gap after earnings, and it got rejected off of that 100-day moving average. It's been heading down while the market's heading up. So this is a pretty nice trade in here. Got a little bit of support right here with this low minus from the low. Yeah, that's decent looking short actually. I don't see anything on Boeing. That's a nice breakdown in SEDG. And I think this stock is a good short. You can see these multiple breakdowns through these low minuses and the stock getting rejected off of these downward sloping trend lines below AVWAP-E, below the 200, 100, 50-day. The stock's in a steady decline. This is a good short. Alibaba. This is a choppier stock, but I do like this short. And I like it because you've got a horizontal compression in here. You've got a breakout through this compression. And then you've got a buying climax in here. Since that buying climax, this stock has not looked back. Look at that selling pressure. It held on to the 200-day moving average briefly and then cracked right down through it the last 3 days. That's a hearty amount of selling on heavy volume. Okay? It's a key ingredient right now is you got to have heavy volume. So I like BABA on the short side, and I did take a look. The options are cheap. I believe the stock trades at, well, let's verify. It has a IV of about 31, and you can see how the IV's been gradually declining. 31, that means that we need to be buyers of these options. And if we get that bearish engulfing candle, that tells us that we could see follow through selling the next few days after that. Okay, bearish engulfing candle on SPY, and that is the type of move in the market that could fuel this leg lower also. So I like it. I think they're trading at $3.50. Those are the July monthly options. You can go farther out in time as well. And so they're about $1.70 in the money, trading at $3.50. So there is some time premium in there, but not much. You can go deeper in the money if you want to have higher delta. I'm going to take a look at Baidu since it's right next to it. This is nice stuff too. Look at that. That is a significant low minus trend line breach. This is a low plus trend line breach. That is a significant breach. That's a good one. Baidu, I like this short equally. Let's see what that IV is at. Also like 26. Here's another short that you can do. So again, as I was mentioning, the price action that I'm seeing on the short side is very consistent, and it's been a lot steadier than I'm seeing on the long side. So when you're buying these stocks that are near new highs or trying to bounce, it's just so hard fought. You're like in there trying to make 20, 30 cents. The stock just seems like it's out of gas, and then it just pulls back. And then the same type of thing where the shorts are just chunk, 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 chunk. Once that bad news is out there, they just destroy these stocks right now. So that is your pick of the day. It's a bearish pick off of a bearish engulfing candle. That is what we're waiting for, because that is what I believe presents the best opportunity. Don't have that yet, but if we see it, then I think we're going to have a decent trading opportunity. And by all means, please watch the live event on Tuesday. I think you're really going to enjoy it. This is a fresh perspective. And I know that Rajul, if you put the amount of time and effort into trading that Rajul's doing right now, and I'll also have links to his YouTube station, so YouTube channel. So if you want to view his videos every day, you absolutely can. But if you put in that type of work, all of these lessons are just going to be so deeply ingrained that when you start going through your decision-making process, it just clicks. There's nothing like doing these videos or writing really detailed trade logs. Thanks so much for watching, everyone. Hope you had a great Father's Day. We will see you Tuesday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.